Welcome aboard Chain Train, your one-stop destination for all things cryptocurrency. This episode dives into the latest global developments shaping the crypto space. From regulatory updates in India to Tether's relocation to El Salvador and Bitcoin's recent market moves, we cover it all. Buckle up for a thrilling ride through the ever-evolving world of blockchain digital assets and crypto innovation. Bitcoin briefly dropped below $90,000, marking its lowest point since November amid economic concerns and a volatile trading week. Investor jitters stemmed from fears of the Federal Reserve slowing rate cuts due to strong labor market data, and a federal judge's decision allowing the US government to sell seized Bitcoin worth $6.5 billion. However, experts suggest the market could absorb the impact quickly. MicroStrategy purchased 2530 Bitcoins for $243 million, increasing its total to 450000 BTC. Broader crypto markets also struggled with Ethereum and Solana dropping 18% and 19% respectively. XRP bucked the trend, gaining 1% amid regulatory optimism linked to Ripple. Despite positive inflows into spot Bitcoin, ETF's sentiment remains cautious. Tether, the world's largest stablecoin issuer, is relocating its headquarters to El Salvador, aiming to capitalize on the country's ambition to become a crypto trading hub. CEO Paulo Ardoino and co-founders will also move to El Salvador, where Tether recently obtained a digital asset service provider license. This marks the company's first physical headquarters, although most of its 100 plus staff will continue working remotely. Tether plans to hire 100 Salvadorans in the coming years. The move aligns with El Salvador's pro-crypto stance, exemplified by making Bitcoin legal tender in 2021. President Nayib Bukele welcomed Tether's decision, reinforcing his vision of fostering digital currency adoption. Tether S stablecoin USDT dominates two-thirds of the $212 billion stablecoin market, which has grown 45% over the past year. However, regulators remain concerned about the risks stablecoins pose to traditional financial systems. Tether, under scrutiny for its reserves, claims most of its assets are held with Cantor Fitzgerald. Cryptocurrencies faced a rough week, with Bitcoin dropping 3.6% to $94,778 and Ether losing 9.3% to $3,268, driven by hawkish signals from the Federal Reserve and stronger than expected US jobs data. The Department of Justice was cleared to sell 69370 Bitcoin, valued at $6.5 billion, seized from the Silk Road marketplace. While a sale isn't immediate, a structured auction may follow. The decision comes ahead of President-elect Donald Trump's pro-crypto administration, fueling optimism in the market. Predictions suggest Bitcoin could surpass $100,000 and stablecoins may double to $400 billion in 2025. Cryptocurrency trading volume has dropped recently, with Bitcoin and other assets experiencing a slowdown, according to on-chain data from Sentiment. This decline suggests a shift in trader attention, as lower activity typically signals reduced interest. The drop in volume spans across various segments, including Layer 1, for example Bitcoin, Ethereum, Layer 2 meme-based tokens, and AI-related coins. After a period of high activity in November and December, investor morale has been impacted by recent bearish trends, leading to the lowest trading volume since early November. Bitcoin is currently trading at around $90,700, down nearly 8% in the past week. India's cryptocurrency regulation has been evolving, with a mix of harsh measures and growing market adoption. In 2018, the Reserve Bank of India banned cryptocurrency transactions, but the Supreme Court overturned it in 2020, sparking a trading surge. However, India's Finance Ministry extended anti-money laundering regulations to virtual digital assets in 2023, while a 1% tax on transactions and a 30% tax on crypto profits continue to affect the market. Despite these challenges, India topped global crypto adoption charts in 2023 and 2024. Advocates call for a more flexible regulatory framework, especially regarding taxation, to encourage growth. India's market is expected to expand further with proposals for a multi-regulator oversight system from the Securities and Exchange Board of India in 2024, offering potential clarity. 8 suspects have been arrested in connection with a major cryptocurrency heist worth over Rs 90 million in Karachi. The heist involving policemen led to the kidnapping of cryptocurrency trader Mohammed Arsalan Malik and the theft of $340,000 in cryptocurrency USDT. Investigators recovered Rs 12 million in cash, a Mercedes car, and prize bonds during the probe. While the prime suspect, Ali Raza, was initially detained, sources claim he was released under a barter system with police. Authorities are continuing efforts to recover the remaining stolen assets and apprehend additional suspects. Allegations of misconduct will be investigated once the recovery process concludes. Kazakh mining magnates, once business partners in a cryptocurrency mining firm, are now engaged in a bitter information war against each other through dedicated websites. The conflict has caught the attention of the British government, highlighting the growing tensions in the cryptocurrency mining industry. This battle follows a series of legal disputes between the businessmen, underscoring the intersection of private intelligence operations and the cryptocurrency sector. The situation reflects the larger geopolitical and business dynamics surrounding the crypto mining industry in Kazakhstan and beyond. MicroStrategy co-founder Michael Saylor urged companies to invest in Bitcoin, calling bonds toxic due to their poor returns since 2020. In his keynote speech at the ICR conference, Saylor compared Bitcoin's performance to bonds, noting that Bitcoin has increased in value while bonds have declined. He emphasized that companies have a choice: stick with traditional investments like treasury bonds or embrace Bitcoin as digital capital. Saylor criticized companies like Microsoft and Nvidia for not following MicroStrategy's example, which now owns over 2% of all Bitcoin valued at $41 billion. Thailand plans to launch a cryptocurrency payments pilot project in Phuket in 2025, allowing foreign tourists to use digital assets for purchases at participating hotels, restaurants, and retail outlets. The initiative aims to boost tourism and promote digital asset adoption while complying with existing legal regulations. Bitcoin will be converted into Thai baht through a clearinghouse, and the project will operate within current laws without requiring amendments. Authorities will collaborate with local businesses and financial institutions, with potential expansion to other tourist destinations if successful. Thanks for joining us on Chain Train. Stay tuned for our next episode where we bring you deeper insights and breaking updates from the cryptocurrency universe. Remember, the blockchain revolution never stops, neither do we. Until next time, keep riding the chain.